the current chance of him actually winning the presidential election stands at, according to Polymarket, 17%. What do you think Biden needs to do at this point to turn his odds around?
He needs to stop talking to the angels and start talking to God.
I mean, concretely, is there any policy measure that you're expecting to change in the next couple of months?
No,
Forget the debate,
no,
the next debate for just no.
no.
Steve Hanke returns to the show. He is the professor of applied economics at Johns Hopkins University. And today we'll be discussing three topics with the professor. Number one, the odds of a Trump or Biden win by November, as predicted by the betting markets. Professor Hanke prefers the betting markets over polls in making predictions. He says it's been historically more accurate for a number of reasons, which we'll discuss today. Number two, the most recent election in France and the new tax policies that the new French government is proposing and the impacts on the economy. And number three, the yen versus the dollar. The yen is at a 38-year low versus the dollar. What's going on and what's next? Very interesting discussion we'll be having with Professor Hanke today. On some personal news, I'll be launching a newsletter later this month. So if you're interested in getting that, put your email in the link down below and subscribe. This newsletter is completely free. And what I'll be doing is summing up the key and top videos of the week, basically just a highlight summary of the entire week. So if you're somebody who's busy and can't watch the entire episode, where all my videos I publish once every day, at least once a day, 1 to 2 times a day. So it's understandable if you can't watch all my videos. Subscribe to the newsletter. It'll get a condensed version, a print version of my interviews, the thoughts of the week. Plus, I'll be adding a little bit of my own thoughts and analysis to the week's top news. Professor Hanke, welcome back to the show. Thank you for being here.
Great to be with you, David.
Yes, great to be with you as always. Let's start by talking about what's happening right now with betting markets. So you and I talked offline about what is the best way to gauge whether or not Trump or Biden is ahead in the probability of winning the election. You talked to me about how the betting market is more, I guess, in your way of explaining it, precise or up to date than perhaps polls. Tell us why we're using the betting market as a better indicator first, and then we'll get into the actual probabilities.
Well, the key word here is market. These betting markets are, in fact, markets, just like the market for corn. And what does a market do? A market is a very efficient way of gathering dispersed information from buyers and sellers and coming up with a simple metric to look at to gauge things, the price of it. This is a very important idea, and one actually that Frederick Hayek, a family friend and mentor of mine, received a Nobel Prize for. That's what markets do. They aggregate dispersed information and display it in a simple, objective way. So, for example, let's think about this a couple of different ways that people are familiar with before we get into betting markets. Let's just talk about markets for a minute. If you look at a stock price is what? The aggregation of the preferences of people who have their own skin in the game, potential buyers and sellers, all coming together, buying, selling, and bingo, you get a price. And the price tells you objectively what the value of the stock is, or what the value of a bushel of corn is, or whatever the market happens to be. Now, alternatively, we can look at investment bank reports by so-called experts who are trying to value the stock, and they tell you what they think the value of the stock is. But that's a subjective valuation placed by one of the analysts. You got hundreds of analysts out there, thousands of analysts out there. They all have their own separate ideas. So the most reliable way to figure out what it's all about isn't to take a poll of the analyst and see what the consensus number is. The easiest way to do is just go to the market and see what the market price is. And that tells you objectively, not subjectively, It tells you objectively what the price of the stock or a particular commodity or asset happens to be. So we've talked about this before. Let's go from the stock market and the market for commodities and jump into the federal funds futures market. You always ask me, you say, "Oh, what's the Fed going to do? What's the Fed going to do? Are they going to increase the Fed funds rate or decrease the Fed funds rate at the next meeting?" And I always go to what? I always go to the market. The Chicago Mercantile Exchange has a market in federal funds. It's a derivatives market, and there is a price on those, and you can translate those prices that are displayed for the Fed funds futures contracts that are done month by month by month to get eventually translate those prices into a probability of a change. For example, just today, I looked at what is the probability that the Fed will reduce the Fed funds rate by 25 basis points at the September 18th meeting that they're going to have. It's 72.5%. So there's a very high probability that they'll reduce the Fed funds rate, but there's also a significant probability they won't do anything. There's a 22.4% chance they won't change. And we could go then to the November meeting, and we've got probabilities for changing the Fed funds rate. So that is how markets work. They aggregate, disperse information, and collect it all into one place. So you end up with what? An objective value or price or probability that you can see. And that's different than polling. Polling goes around and asks every Tom, Dick, and Harry what they think. Now, there's a problem with that. Tom, Dick, and Harry have no incentive to tell a pollster the truth. And there's also a great deal of problem in getting the right sample of people you're going to ask about this. Anyway, the pollsters have been doing this. They have it all refined, and they get a number. I prefer the market number, and I prefer it for two reasons. It's objective. It isn't subjective, and it's objective collecting this dispersed information by people who have skin in the game. If somebody calls me and asks me for a polling idea, I have no skin in the game, and I have no reason. Maybe I'll be biased and want to lie. I won't want to tell them actually that I'm going to vote for somebody that's out of favor. I'd look bad, you see, if I did that. Maybe I wouldn't want to tell them actually what was on my mind. So that's one problem. The other problem is that the prediction markets are in real time. So they come way ahead of a poll. If a poll is done, it's going to take a while for them to assemble the data, put the data out, and then there's a lag between the time they take the poll and the time they actually give you the results, and the results are printed. This isn't the case with a prediction market. It's in real time. There isn't any lag. So even if the polling information was exactly the same as the prediction market would be superior because you'd get the information more rapidly.
Now, it depends which polling site you're looking at. We're going to talk about Polymarket, supposedly one of the most active in the world. But aren't you concerned that perhaps the sample size for the polling markets are bigger than the sample size of the betting markets? There's more Tom, Dicks, and Harrys being asked out there than the actual, yeah.
Yeah, you do want to go to polling markets where there's a high volume of data. It's just like looking at the stock market. If there's very low volume and the price comes up, well, it is objective, but it isn't quite as significant as if there's very high volume and the market's very liquid. So the bigger the better. The more liquid, the better. So that is a point.
The people who participate in these betting markets, is it possible that they're just generally more conservative, more capital markets oriented, and therefore more right leaning? Would that skew any sort of?
No, not at all. They're in the betting market to win.
Right. Okay.
they have an idea about what they think the outcome of whatever they're betting is, and they put their own money on the line because they think they're going to win the bet.
Now, over the many years you follow this, generally speaking, have the betting markets been more accurate or, um, yeah, more accurate leading indicators of who's
Yes,
actually going to win?
yes, generally yes, and they become very much more accurate the closer you get in to the point of time, the point in occurrence when the bet is going to come due, when the election date is coming. The closer to the election, they become, in fact, quite a bit more accurate. Now, they're not always accurate, by the way. They're not always accurate. We just had, if you looked at the betting markets as well as the polling, by the way, they were both off in the French presidential election, the second round that just occurred yesterday. Everyone got it wrong.
I guess the people who bet left wing made a lot of money. We'll
Yeah,
we'll talk about that. Yeah,
yeah,
we're going to get into
yeah,
the French election in just a minute. That's going to be an interesting discussion.
okay, but my point wasn't that these are always accurate. My point is that they're superior and they are objective relative to polling, which is less accurate and it's subjective.
I understand.
It's
Right.
it's just think of it this way, David. Let's keep it very concrete because betting people get confused about what all this is about. Let's look at the market for stocks. Would would you rather take as the value of a stock the price that is being displayed for that stock in the market, or take a poll of all the analysts who are analyzing that stock and take the consensus value of the analyst? I mean, you know very well. I mean, the price on the market is what you're going to be looking at. Now you might look at that objective price in the market. David Lynn might look at that and he'd say, "Oh, that thing is way off. I think subjectively, I'm a better analyst than all this stuff being aggregated in the market, and I think the price is way lower than the fundamental value." And if that's the case, you'd be like Warren Buffett, and you'd jump all over the thing and buy it. Or alternatively, if you thought the market price was way too high, you'd be going short and want to sell a thing.
We'll go back to the election in just a minute, but this goes back to a broader discussion about whether markets are efficient and are able to correctly or more accurately price in events. For example, one could argue the market is currently priced in one Fed cut. Earlier in the year, it was pricing in six, right? So things have changed. Generally speaking, then, do you agree that A, markets are efficient, they're pricing in all available information, and B, markets are good indicators for what's actually going to happen in real life events?
The answer to that's all correct. Now, the one thing it isn't absolute or perfectly efficient. They're moderately efficient.
Okay.
Let's put it.
All right.
I mean, you can go to the extreme on the thing and say they're perfectly efficient at all times, and and that's not my position. My position, they're moderately efficient. They're much more efficient than any alternative out there.
The market's not always right, but it is the closest
It's
that we
not
can
always
get.
right, but it tends to revert back if it gets off base. It tends to revert back to being right. That's what happens. The tendency is for the thing to self-correct. You don't get into some kind of you know cobweb model where you've got some huge disequilibrium. The thing explodes, and goes wacko. It doesn't go wacko. It tends to revert back to, the fundamental value. It can stay off base. By the way, it can stay off base in the stock market for quite some time. But if you hang in there, again, if you're Warren Buffett, and you hang in there, it's probably going to revert back to fundamental value.
All right. Well, let's analyze the actual results now. The chance of Biden dropping out of the presidential race, according to Polymarket, currently a 43% chance. So inversely, the chance of him staying as a Democratic nominee is 64%. I wonder why this number, the chance of him dropping out, isn't higher. It seems to me that the Democrats are still sticking to Biden as their preferred nominee. Do you have any thoughts on this?
Yeah, the
Following the
chances
debate
of
with
him,
Trump. I'm referring to following the
yeah,
debate with Trump. People were
if you
expecting,
look at
yeah.
following the debate, the chances of him dropping out were a lot higher, and now the chances are going down, 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 and the reason they're going down is that the president's digging in his heels, and the president is powerful. We'll see what happens, but he sent a letter up to Congress and the congressional leadership's meeting, but I think the president, his attempt is to say I'm staying, and he put it in writing to the congressional delegation from the Democratic Party, and we'll see what happens. But the president isn't without power.
The current chance of him actually winning the presidential election stands at, according to Polymarket, 17%. So this is far behind 61%, which is Trump's odds of winning. Do you think that the Democrats have a higher chance of actually getting into the White House if they elect another nominee at this point?
Well,
According to the
if you
markets.
look at Polly Markets, and that'll give us the answer. What's it saying? You got Trump at 61, and
Yeah.
what are the other alternatives?
It's Biden at 17, Kamala Harris at 11, Michelle Obama at 5, other Democrat politician at 3, Gavin Newsom at
Okay,
2. Yeah.
so we have you've just given us objectively what the market's pricing in right now.
Okay. So to sum up,
And the markets are good enough for me, David.
to sum up, the market is pricing in a very slim chance of a Democrat victory either way. Either if President Biden stays in the race or drops out. That's what it's saying right now.
Yeah, but right now, as we speak today, on July 8th at 3:30 p.m. Eastern time. Now that can change rapidly, and the beauty of this is that if we're looking at the market, the prediction market, poly market, we know that minute by minute. We know what's going on. We don't have to take a poll to find out what's going on. We have the market price.
Do you think there are other economic factors at play? Perhaps people are looking at changes in the economy, or was this recent surge in Trump's popularity solely based on the debate result?
Well, the beauty of markets, all information is aggregated and summarized in the market. So the answer to that is that all these factors, you could give me 1,000 different scenarios and hypotheticals, and I would answer by saying they're all in the market.
Do you think that the recent movement in the 10-year yield, which is to say the 10-year yield moving up, has had anything to do with the election debate?
That's been the interpretation of the market watchers that it did. All we know, look, you can do what we call an event study. You look at what the yield was before the debate, and then you look at the yield after the debate. The debate was the event, and see if they're the same or different, and they were different. So therefore, people conclude when they do that kind of event study that the event had some effect on the price or the yield.
What do you think Biden needs to do at this point to turn his odds around?
He needs to stop talking to the angels and start talking to God.
I mean, concretely, is there any policy measure that you're expecting to change in the next couple of months?
No,
Forget the debate,
No,
the next debate for just
no,
no.
no. Quite frankly, I think any significant policy change would tank the guy. It would give the impression that he was getting shaken up.
How do you think other world leaders are perhaps, we don't know. I mean, we're just speculating. How do you think other world leaders are looking at this and reacting? What do you think Putin's thinking? What do you think Xi Jinping's thinking?
I doubt if they change their mind very much.
All right.
I think I think these we're talking about two leaders who have very good intelligence, and they are both of them intelligent, and they've sized up Biden a long time ago. It had nothing to do with a debate or Trump or anything like that. They got the score on Biden, and by the way, they very well have the score on Trump too.
No, I understand, but do you think that perhaps following this last debate, with now currently the odds favoring a Trump victory, has that changed foreign policy at all?
The only thing that would change, number one, if uh, if you look at spokesmen, for example, seasoned diplomats like Sergei Lavrov, the foreign minister of Russia, and they ask him, well, what do you think about this vote, or what do you think about the debate, or something? And his response is always, I don't care, because they know what the alternatives are. They're ready. They're ready for either opponent. Let's put it that way.
Speaking of, all right, let's follow up. We have plenty more. We have a few more months before November, so plenty more election material to cover.
Oh yeah,
in our regular sessions.
By the way,
we'll keep tabs on this.
These things up for people to get a handle. If you're really interested in how to do this, by the way, and some of our friends and viewers might be, if you go to the Chicago Mercantile Exchange and go to their website, there's something called Understanding the CME Group Fed Watch Tool Methodology. And it's by Arthur Lobao, Lobao, April 25th, 2023. And it's a very good primer for how you actually make the calculations. So people, if you really want to do the arithmetic yourself, this tells you how to do it by looking at the prices of the Fed funds futures. Yes, but also the Chicago Mercantile Exchange makes it easy for you because they actually do the arithmetic themselves, and they give you a summary. So, but for people, some of the viewers that watch our interviews send me emails, and they like to get out in the weeds, know about the calculations, how to do this, that, and the other thing. And the Chicago Mercantile Exchange does a nice job of presenting just a how-to manual of how to do it.
Let's talk about elections on the other side of the pond now, Professor. France and the UK. We'll focus on France today. France, the leftists' plan include 90% top marginal income tax rate. I'm reading an article from Bloomberg. France's leftist alliance would raise the top marginal income tax rate to 90% if it were to take over the government following legislative elections that run through July 7th. This was the proposal from a few weeks ago. As you know, they won the election. What's next?
It looks like it's going to be a hung parliament with three groups kind of deadlocked, and that means the government will be more or less kind of paralyzed, and the president of the republic, Macron, will be very weakened. He pulled this gamble by having this election way before he had to, way before the due date, and it looks like he's basically tanked himself. It was a stupid thing to do, and in my opinion, it was a stupid thing to do. But he's done a lot of stupid things. He's managed the economy very poorly in France, and he's very aggressive in this war with Russia, which, by the way, was one of the swing things that got the left in there. The left faction isn't so keen on continuing to have a war with Russia, but at any rate, it weakens the president of the republic, it paralyzes the parliament and the General Assembly, and I think we'll have to wait and see. It'll be some time before he even appoints a new prime minister.
I just want to ask you about the concept of a higher marginal tax rate. The current income tax rate in France currently tops out at 45% on income over 177,000 euros. This plan would obviously raise the tax if it were to pass. A budget amendment would apply to taxable income over 411,000 euros. 90% is a proposed rate. Has there been a precedent in either France or another country where the tax bracket was taxed at 90%?
Of course, the United States before Ronald Reagan became president, for God's sake.
Okay, what happened then? Can you guys give us a history lesson?
Yeah, the history lesson, it's called tank time. In the tank. And by the way, the left coalition in France, of course, is much further left than anything even that anyone ever dreamed about in the United States. It's hard left. So they've got all kinds of tanking policies up their sleeve. They basically, if they got their own way, they'd basically destroy France. They won't get their own way. As I said, the parliament's pretty much hung, but their ideas that we're talking about, way out there.
The reason I asked you for historical president is that, well, like you pointed out, before Reagan, this was enacted. It didn't destroy America, did it? Why would it destroy France?
Well, it didn't destroy it. It did tremendous damage to the United States. Why do you think? What were the factors leading to stagflation in the 1970s? The U.S. was in bad shape, but the left in France has many things up their sleeve. The tax, you didn't even mention the wealth tax they want to propose, or many other things. So there's a whole package of things that it's just as red as you possibly can get.
I'm sensing from your tone you don't approve of this policy.
Remember, David, remember that you're probably too young to remember the Beatles, but there was a group called the Beatles, and the Beatles. Remember that great Beatles tune back in the USSR. That's where the left wants to take France, back in the USSR.
Apparently,
we know how that worked. The USSR doesn't exist anymore. It went bankrupt.
Apparently, they also wrote the song "Taxman" based on tax policies of their time. I don't know. I was again too young to have been there, but that's speaking of the Beatles. Okay, so
well, I won't quoting, but if you go to the quotes of Ringo Starr, you'll have a pretty good idea of what Ringo thought about government and government intervention.
Okay. Anyway, I'm sensing from your tone you don't approve of the Left Alliance's tax proposals for France, correct?
Correct.
Okay, let's move on. I want to ask you about the yen. The yen, can you just summarize for us why the yen has been depreciating? It's at 160 now. It was at 161, almost 162 not too long ago. It is currently at a 38-year low against the dollar. What has been happening?
Let's walk through this thing. Let's stand back before we get to the punchline and where the rubber meets the road. Let's ramp up a little bit. And we've had very low monetary growth growth in the money supply in Japan for about 30 years. Uh, and as a result of that, we have very low inflation. The current growth rate, by the way, in broad money in Japan is 1.9% per year. And to show you how low that is, to hit Hanke's golden growth rate that's consistent with hitting the inflation target of 2% in Japan, they'd have to be growing a little bit over 5%. So it's growing less than half the rate it should be growing if they want to hit their inflation target. So the inflation is most of the time it's been below 1%. Now it is up a little bit above the inflation target. It's 2.9%. So you get slow monetary growth, slow inflation, and as a result, remember, interest rates follow inflation. So interest rates are very low. The 1 year interest rate on JGBs, the bonds, is 0.2%. So it's very, very low. So low money growth gives you low inflation, gives you low interest rates. That's the sequence of things. Now, why is the yen so low? Well, there are two factors related to this very low interest rate that's following the low inflation and low growth in the money supply. One's called the carry trade. And what you do, you borrow yen, you go basically short yen and take that money that you borrowed and invest it in higher yielding assets. So you're borrowing it's something less than 0.5%, and you're investing. The big carry trade was with Mexico until the recent Mexican election, and right now and there's still a carry trade, a yen Mexican peso carry trade, and so you borrow at 0.2%, and you invest a 10-year bond in Mexico in pesos is 10.3%. So the spread's 10.1%. If the exchange rates don't change, you're going to be walking away with a 10.1% yield. Now, the one that's hot right now and the big carry trade that's gone bananas is the yen Turkish lira trade. So you borrow at 0.2%, let's say, in yen, and you're investing in a 10-year bond in Turkey, a lira denominated bond, 27.4%, their yield is today. So the net is positive 27.2%. So that's one reason the yen goes down. Everybody's borrowing yen. They're going short the yen because of that. The other factor is the stock market in Japan is pretty hot, and people like Warren Buffett are in the stock market, but they want to hedge their exposure in yen, and they do that by one of two ways, several ways, but what Warren Buffett's been doing, he sells yen bonds. He borrows yen. He's borrowing yen to hedge his yen exposure, and he's been borrowing those yen at around 1%. So it's costing him about 1% to protect himself against a depreciation of the yen against the greenback. So all this borrowing through carry trades and hedging by all the people who piled into the stock market in Tokyo, all of that is driving the yen down. In short, low money supply growth, low inflation result in a low interest rate, and that low interest rate is low in absolute terms, and it's low in relative to everybody else. So the carry trade. So that's the whole story there.
Good summary. Thank you. It's a frequently asked question to me, which I'll ask you now, whether or not the Bank of Japan is likely to intervene. What do you think?
They might, but it won't have much effect. the fundamentals are these interest rate spreads. And the big problem is the Bank of Japan, they gear their money supply. They focus on the wrong thing. They focus on interest rates, which are really a symptom of what? The money supply and monetary policy. They've got to start focusing on the growth rate and the money supply. If they got the growth rate and the money supply up, the inflation would go up and interest rates would go up, and the inflation trade wouldn't be that attractive, and the yen would get a lot stronger.
If they do intervene, what impact, if any, would that have on the U.S. Treasury markets? That's another question I got.
I don't think it's a big deal. I mean, it's one of those questions. Every big move in any market has some effect on something, but whether it's really relevant or not is another issue. And I think it's basically pretty much irrelevant.
Well, I think that the question I got in specifically was whether or not it would drive up yields. The assumption here is if the Bank of Japan needs to sell treasuries to buy yen and prop up the yen, wouldn't that push up the U.S. 10-year yield, right? But you're saying not significantly.
Well, it depends on whether they're selling. It depends on how they would intervene, number one. So again, we're talking about something that it's very hard to speculate. This is kind of a game theoretic problem where you've got a bunch of different scenarios. I don't know. We'd have to specify, David, exactly how they were going to intervene. And then if we knew that, we could run through a scenario for what probably would happen. But then you'd have to stand back and say, well, in the grand scheme of things, what do we think the Bank of Japan actually is going to do? Which one of those scenarios, which one of those options are they going to actually play? And that's a game theoretic thing. So it gets very complicated. To answer the question in a clear way, I can't. It's too complicated. I mean, I could if I'd done all the work and gone through all the scenarios and assigned probabilities to them and all of this stuff.
How in theory, again, we're talking theory here. How could it be done? How could the yen be defended from government policy?
Well, I think the best way to defend it is to change their monetary policy and get their heads screwed on. For 30 years, they've been doing the wrong thing. They haven't been focusing on the money supply. The money supply has been hardly growing at all. And as a result, they've had almost no inflation in Japan, and the economy hasn't been growing. So it's all related to the money supply.
Final question
that's the key thing. The Bank of Japan just doesn't have it right. They are focusing on, they think interest rates are the name of the game when it comes to monetary policy, and they are not. Monetary policy is all about the money supply.
As a former currency trader, how would you evaluate the current direction of the yen? Basically, my final question is, do you think there's more weakness to come, or do you think the fair value should be somewhere?
I think it's going to stay weak until the carry trade becomes less attractive. And how would that be? Well, one way, if interest rates, if inflation and interest rates come down in Turkey, the big carry trade, the yen lira carry trade, will become less attractive. So the closer other interest rates become to the Japanese interest rates, the less attractive the carry trade, which drives the whole thing, and that's basically the name of the game. So there's one way to reduce this. There are two ways to reduce the spread, and that is have policy changes in other non-Japanese countries, or the Japanese get their act together and start focusing on the money supply, start increasing the money supply. That will increase the inflation rate. that will increase interest rates. That'll narrow the carry trade spread and make it less attractive. And as a result, the yen will get stronger.
Great. Thank you for this session, Professor. Let's talk about where we can find you and contact you.
You can follow me on my Twitter at Steve_Hanke. And by the way, I regularly put up these prediction market results, particularly going into these big elections like the one that will be facing us in the United States. And also, again, if people wanted to send me an email, hanke@jhu.edu, I'll put them on my distribution list.
Thank you very much. And yes, please do contact Professor Hanke or myself. I'll put my email down as well if you have any questions for our next session. I'll see you in a couple of weeks. Thank you very much, Professor.
You're welcome, David. Have a great evening.
You as well, and thank you for watching. Don't forget to like and subscribe and follow Professor Hanke down in the links below.